Good morning, everyone. Happy Friday to everyone out there. TGIF for those who celebrate it. Another week is coming to its end, but there's still so much money to be made. Now, I have two stocks for you here today. One, I'm going to advise you to essentially just watch and probably not invest because the volatility with this particular stock has been astronomically high. And I think this is probably one of those stocks that maybe a Wall Street bets group may be controlling to put the middle finger up to Wall Street. But I think this one you should proceed with caution, and we'll get back with it. And I'll inform you guys about this stock right after this. All right, good morning. So first and foremost, this stock right here, right now, ladies and gentlemen, I'm not going to touch. I'm simply just going to watch it. Now I'm going to show you why. Now, Robinhood had a note on here earlier. This stock has recently experienced elevated volatility. Now, let me show you something here, family. For the last 5 years, this is how this stock has been. It came out in 2020. And it's been flatlined, moving laterally for quite some time. And then it took a large dip around $8.63. Then all of a sudden, this stock started to be pumped, okay? Started to grow exponentially for no apparent reason. There's been no huge contracts, no huge deals, but all of a sudden, it just exploded. And so anytime you have a stock like this, with no essential analytics or data or information that alludes to this is why this stock is growing so widely and so fast, it's probably not a good deal for you to invest inside the stock. So let me give you a little more a deep dive inside of this particular stock. Now, for you guys who are not familiar with this stock, this deal with music podcasts, music videos, mobile and tablet devices, as well as desktop, and also in cars. Now, this may be a good stock for you guys to essentially purchase for personal use, but right now I'm going to hold off. I'm going to say just watch this stock because I think you're going to get in way too high from what the predictions and forecasts have stated. Now, this stock is out of Dubai for you guys who are looking at this, but it says 52-week high, $33, and 52-week low, $10 per share. And currently this stock is ticking at $21. Now, for you guys who are not familiar, this is the way the company looks. There's their website here. I'm going to show you this as well. Now, as we're looking at the RSI here, looking at the candlesticks, we're looking at an exponentially growth, and we see this start to tick off here and level out. But before then, I want you to see how the timeline essentially moves laterally. Then all of a sudden has this upward trend. Now, I would like to know why this has exploded with increased volatility. There's really nothing I could find and say this is why this stock is doing so damn well, unless, again, it's been controlled, it's been manipulated by some sort of kind of Wall Street bets group. Now, I'll go over to WeBull, and I'm saying 100% buy, and I'm looking at the high, average, and low are $17. None of this lines up, family. None of this lines up at all for me. And I'm just going to say proceed with caution, please. Proceed with caution when it comes to your money, because I don't believe that this could be essentially a good buy for you guys, okay? Let's move on to the actual stock review. And I just wanted to, again, have you guys to proceed with caution. Now, Vodafone is the stock that I think that could essentially make you guys some really good cash when it comes to dividends. This stock has been around since 1999. So we're looking around, 23 years this stock has been in business. This is a British company that operates in, of course, the UK, well as Africa and Asia. But it has a lot of American partnerships that I believe that you guys could essentially profit from, because I would think they will start trying to move here in the American markets and compete against your Verizons, your T-Mobile, your AT&T. And we know that Sprint and I think Nextel merged. And I think they're going to merge again with another company because Sprint was really never good, right? And Nextel was good for business people with the whole sort of walkie-talkie sort of feel, and they converged. But nonetheless, I digress. But let's get into the stock because it's important. As we're looking at this stock, In the past year, it's been up only 1.79%. Okay, only 1.79%. And the past 3 months, it's been up 18, almost 19% in the past month, around 12%, the past week, 1%. And in the pre-market here, we're looking at 0.37%. Now, as we're looking at this, it says that Vodafone Group and telecommunications services in Europe and internationally, the firms offer mobile services that enable customers to call, text, and access data, fixing services, including broadband television, TV offering, and voice convergence services under the Kokobi and Vodafone One names to customers. Okay. It has over 100,000 employees, and you see the CEO there, and it's out of Berkshire, Newbury, and that's out of England, I believe. As well, we're looking at the 52-week low at $14.53, the 52-week high $20 per share. And again, telecommunications out of the UK, and we have buy at 91.3%, hold at 4.3%, sell at 4.3%. And I'm very curious right here, ladies and gentlemen, of what the bulls are saying. Let's see what the bulls are saying here, because they're expecting this stock to do even better. It says even after the 2019 dividend cut, Vodafone shares still offer a very attractive yield. The current payout should prove sustainable with room for growth as restructuring efforts wind down. While Europe forms the core of the business, Vodafone still provides access to several emerging markets with strong growth potential. Vodafone possesses massive scale, serving around 280 million wireless customers globally, and it owns extensive wireless and fixed line works in most of the markets it serves. Few telecom firms can match its size and strength. Okay, I don't see anything as far as the earnings, and of course, AT&T, Verizon, and other telecommunication services here. Now, what's good about Vodafone, for one thing, when I went to Ghana, they actually had Vodafone in Ghana. That's what kind of made me allude to giving you the stock here today, because like this must be a global stock, but again, it's not in America, and I know why. The reason why it's not in America is because when I was in Ghana, you had to pay. You know, they don't have unlimited text, unlimited data, unlimited messaging. So a lot of times their phone conversations are very, very quick. And if they have long conversations, it's usually through WhatsApp on Wi-Fi. But when it comes to telephone, you don't really see too many people on the telephone like you hear in America or in Korea or in Japan, where everybody is on their phone all the time. I didn't see that in Ghana. So they kind of got this, you pay for a card and you have a certain amount of data or usage, so to speak. And I'm like, why don't they have unlimited? When I was telling my Ghanaian driver, you know, in America, we pay like, $50 per month, and we have unlimited everything. It blew his mind that they have that sort of we have that sort of access in those sort of plans. And I realized Vodafone can't compete in the American market unless they change their structure simply for America. See, what I've noticed traveling the world, ladies and gentlemen, what you notice is America has manipulated and monopolized the entire world to our bidding. I'm just being real for you. So there's a lot of times where you can get in on other business deals that's not offered outside the world. Like, ladies and gentlemen, when you live in certain states, certain cities, you just pay. I remember growing up in Washington, D.C., where the only thing we had to do was pay your rent. And your rent included your electricity and your water bill. And then when I started to move outside of Washington, D.C., DMV area, I said, wait a minute, y'all pay for water? Wait a minute, why is electricity not included in your bill? Now, granted, that's probably more common nowadays. Now they're splitting up and being more capitalized while bills are being actually split up. But nonetheless, in America, we have been privileged to the point where when you travel outside the world, they pay for everything. And that's why a lot of times we have things in access. Let me move on before I start to preach. All right. Moving right along, I'm gonna give you guys the dividends here. Now, as we see here, ladies and gentlemen, we see that the dividends are around 53 cents per share, and this is a stock under $20. We see the market cap at $51 billion. That's absolutely phenomenal. And this is a company that really doesn't have that much debt. I'm pretty sure they're reinvesting a lot of their profit back into the company to increase market share, to increase profit, to increase sales, to increase advertising, etc. So we're only looking at 11 cents EPS, a negative 11 cents EPS earnings per share. So we're looking good there. Year to date, they're above my 20% mark. So they are a very, very profitable stock at year to date at 25%. And we're also looking at the ratings here on MarketWatch. It has a buy rating. So everything is leaning towards the stock to buy. This is the most important part of the video. The Vodafone partnerships. I have to blow this up for you guys. This is absolutely phenomenal because I want to show you the sort of connections that they have from top to bottom. Hewlett Packard, Huawei Technologies, Amazon Web Services, Riverbed, Zebra Technologies, Fake Productions, Intel, Sage, IBM, MySQL, Salesforce, Google, Cisco Systems, Dell Technology, Microsoft, to name a few. Vodafone is in the middle of all of this family. Very, very strategic, very, very exponential partnerships for them to grow and be a giant, even more so what they already are. Don't forget that Vodafone has over 280 million customers worldwide. Let me put that in perspective. In America, the estimated population, according to the Census Bureau, is around 330 million people, give or take a couple 100,000, but 330 million people. And their customer base is 280 million. Put that in your pipe and smoke it. Because I think that this stock, according to my green indicator light, is a buy. Let's see their projections very quickly. So we're looking at the projections here. We see that on a low at $16, and they're currently trading at $18.72. The median price is $22.71, according to CNN Business, and at a high, $31 per share. So if someone to ask me my advice and ask me what I think that this stock will grow, but look more towards the dividends and look towards more profit long term, okay? And last but not least, we're going to look at WeBull. WeBull has it as a 66.67% buy and a 33.33% strong buy. And the average goes from $24 to $25 respectively, okay? Now, I'm leaning more towards what CNN Business has at 31% high because we will always project very low, and that's normal for them. So I'm okay with that. But nonetheless, ladies and gentlemen, according to the stock I showed you previously, the first stock and this stock is where you want to put your money at. This is my advice, just my opinion, my perspective, and of course, a little bit of bias. This is Financial Literacy 101. Learn money and be inspired. Happy Friday to everyone. You guys have a great and wonderful weekend holiday. I'm out.